Hello, everyone. Welcome to this webinar. This webinar is going to talk about, building the conditions for women's entrepreneurship and empowerment with a focus on financial health. My name is Rakhi Sahai, and I'm part of UNCDF's financial health team. This webinar is UNCDF's effort to help improve South-South learning and knowledge sharing on building innovative financial solutions that build financial resilience and security among women entrepreneurs globally. I would like to invite our moderator for this session, Ms. Aprajita Agarwal, Director of Strategy and Development at Value for Women. Value for Women is an advisory firm helping organizations advance gender inclusion. So yeah, welcome Aprajita, and over to you.
Thank you, Rakhi. Good morning, good afternoon, good evening, depending on where you are joining from. It's a pleasure to be moderating this session today on behalf of UNCDF and Center for Financial Health. My name is Aprajita Agarwal, and as Rakhi mentioned, I represent Value for Women. We work with investors, funders, intermediaries, government agencies, nonprofits, and SMEs to advance gender lens investing and gender-forward business practices, especially in emerging markets in Africa, Asia, and Latin America. Just to lay out some ground rules, we are on this webinar today, I think, expecting over 100 participants on this. The whole webinar is going to discuss about how we can focus on building South-South learning in the space of building financial health for women's entrepreneurship and empowerment. I have some fantastic panelists as part of the discussion today that I'd be moderating a discussion with, but to lay out some ground rules, we do have a Q&A tab that you should be able to access in the Zoom platform. It allows you to actually ask your questions while the session is on. We would encourage, we would really like to see more interactive discussions, and I would try and bring in as many questions as I can into the discussion that we have today. Please use the Q&A tab. You can post your questions. We can also try and answer some of these in real time. So if you can, when you mention your question, try and keep it brief. Feel free to drop in some details about your organization or yourself. Please do mention if you want the question to be answered by a specific panelist. So if you're directing it to one specific panelist, please do mention that so that we can encourage that particular panelist to answer your question. Some questions we will try and take up in the Q&A, a few minutes that we have set aside for Q&A after the panel. Apart from it, I think everybody will be on mute except our panelists. And if there are any other challenges, I think you can email the organizers or leave a message through the Q&A. This session is also recorded, so I think you'd be able to access it once UNCDF makes this available on their digital platforms. With that, I'm going to go into introducing our panelists for the first panel. Today we have, sorry, and before I do that, I should mention that the discussion today is broken into two parts. The first part has three panelists, and we will focus on talking about the enabling environment, innovation in financial and digital technologies, and what does it take to create livelihoods for women entrepreneurs for improving their financial stability. And in the second part, we are going to have three more panelists, and we'll focus more on platforms, digital supply chains, and what it takes to build resilience for women entrepreneurs. So I'll start with the first set of panelists, and to invite them onto the panel, we have with us Alison Eskison, who's the Vice President at MasterCard Center for Inclusive Growth, Anjani Bansal, Private Sector Partnerships Lead at Bill and Melinda Gates Foundation, and Kanika Pal, who's our South Asia Head for Community Investments and Sustainability Program at Unilever in India. Delighted to have you all here. Please feel free to unmute yourself and to get us all started. Maybe I am going to take the first question with Alison and then request our speakers to follow suit after that. But Alison, if you could talk a little bit about what it takes to create an enabling environment with a gender lens to improve income for women enterprises, maybe with a spotlight on the South Asia region, that would be fantastic. And feel free to bring in experiences and some live examples. Thank you.
Thank you so much, and thank you so much for having me. I'm really excited to be here. It's unusual to actually see the UN reaching out and embracing the private sector, and I'm with the MasterCard Center for Inclusive Growth, which is the philanthropic hub of the company. And so when we think about an enabling environment, particularly a focus on women's economic empowerment, we think about it as really sort of three dimensions. So certainly there's the policy piece, and in South Asia, that is very important, as it is everywhere else, but it's quite unique in South Asia. But we also think about the enabling environment at a micro level, right? So how do communities and families embrace and support and enable women entrepreneurs to be successful, to continue to be successful, and to really own and control their financial success? And the way we start to think about how to tackle those very sticky challenges is really through partnership. And our remit with the Center for Inclusive Growth is economic growth that's equitable for everyone, everywhere. And because that's a macro problem, you have to tackle the enabling environment, and you have to think about how do you get scale. And we do that through partnership. And in many ways, it's we talk about it internally as commercially sustainable social impact. Another way to think about it, or another way to sort of name it, is to think about how do we change business as usual practices so that we're able to drive both impact as well as what the core purpose of a business is, which is to grow and to expand. And so to give you a very specific example, in India, we are working with a number of FMCG partners to make credit available to Kiranas. So those who are not familiar, Kiranas are the little mom and pop neighborhood shops, right? So how do we help those Kiranas that are staples in a neighborhood, but don't necessarily have immovable property, don't necessarily have a credit history, may or may not be banked, and therefore are excluded from accessing financial services? And so what we did is we went to work with a variety of different FMCG partners to say, you all have data on these small businesses. What if we were to tap into the MasterCard network and find a bank that has the appetite to grow, and to see whether or not they would be able to use your sales data to the Kiranas as supplemental information to help complement or augment that thin file, and thereby making credit available. And we did this all through a digital platform, because in this case it's in India, and it's quite remarkable in terms of not only do small store owners get access to financing as well as other financial services, which are important for their growth, but for the long term, they're starting to establish a credit history. So this enables financial service providers to better tailor products for their needs. And so it has a long-term ripple effect. Well, when we were doing this in India, what we realized very early on is that actually there was a gender imbalance in our program. And this is run both from our business side as well as on the philanthropic side, because we provide a fair amount of training to make certain that the Kiranas understand how to use credit productively, understand what it means to be a good borrower so they don't end up in a debt cycle or have bad credit history. So we do a lot of supportive wraparound services. But as we were doing this, when we realized there was a gender imbalance, we actually went to, in this case, USAID, and said, we see how women are inadvertently excluded from our accessing credit because the Kiranas that they own are so small that they aren't actually being serviced directly from the FMCG and the FMCG's distributor, but rather they go to wholesalers or bigger shops to buy their goods. And so their transaction history is invisible. And as a result, we can't actually help them through this program. And so what we did is we co-created a program that really focused on women's economic empowerment and looked at not only women-owned Kiranas, which are very small or tend to be very small in India, we also looked at women-led ones. So even though the Kirana might be incorporated in the husband or the father's name, it's actually a woman who's running it. And we started to build out an economic empowerment program that not only talked about business acumen skills for the women entrepreneurs, so that they could expand their business, but also building their voice, building their credibility in their community, and working with family members and community members to start to change that culture so that there is a more supportive environment that really facilitates and accelerates their growth. And I think one thing that we've learned is that many times, not always, but many times, when a women entrepreneur is successful, you start to see either a backlash from family, right? Like you're not spending enough time taking care of your children or your spouse, or you see that success being absorbed and the husband all of a sudden, or the brother or the father steps in and says, okay, great, now I'll run this. Now it's mine to run. And we really wanted to ensure that women are successful in their business and they grow and they're able to access these financial services, but also that their situation, their community situation, their family situation remains supportive, because that is where we'll see this real transformation where women, particularly in India, but also across South Asia, have this incredible potential to expand the economy in a way that's equitable and fair and just. And that's really what we're all here for today.
Thanks, Alison. I think there's some excellent points that you brought up, and I would have loved to ask you a few questions, but I'm going to hold my peace for now. What I did want to say before I invite our next panelist is that this is, I think what we're seeing across South Asia as well as across the world right now is this sort of very unique situation of having been in a post-pandemic world for this past 1 year. And I think we're seeing that women entrepreneurs, it's probably, they are facing the brunt of it, because that it's almost considered to be the first sort of adjustment that a woman should be able to make, shut down her business probably, or enterprise, and start to focus back on care care duties that she may have to do. So I think it becomes even more important in situations like these, or in times like these, to see how we can create the right partnerships, the right tools to equip women entrepreneurs, and not just women entrepreneurs, I would say even women working in small enterprises, on their financial health and improving their resilience. But with that, I'd love to invite Anjani to present some of his thoughts next. Anjani, what I'd love for you to talk about is the financial and digital innovation side of things, and how you've seen those being able to leapfrog some of the challenges that Alison also mentioned and that we are all very familiar with. Anjani, you're on mute.
Yeah. Hi, can you hear me now? Great.
Yes,
Yeah, thanks, Aparajita, and thanks for inviting me for this discussion. It's, I'm really, to be honest, quite excited by the entire, change that is happening on the digital innovation side in the country, and the potential that it has to significantly impact women's economic empowerment. When I think about how digital technologies can be applied, essentially, I try to think of it in three buckets. One is on job seekers, like you said, so women entrepreneurs, and third on ownership and control of assets. And we try to dissect the landscape in these three areas to understand where the opportunities lie. So, I can perhaps pick one, say, women entrepreneurs, to see and talk about what the landscape looks like. And I think, even for women entrepreneurs, I think the three most important areas where technology could play a role and is playing a role are access to finance, access to markets, and business management services that every entrepreneur needs to grow their business. And when it comes to access to market, what I find quite exciting when we look, say, 5 or 10 years down the line, is how some of the new tech-based business models are taking hold in the country, like social commerce or rural e-commerce, gig economy, delivery platforms. And all of these channels are primarily technology enabled and are offering new opportunities to women entrepreneurs. So if you take, say, social commerce as an example, we see it's growing at a rate of 50%, one of the fastest growing sectors, still very small part of the economy, but one of the fastest growing sectors, and also predominantly employs women, or gives opportunities to women entrepreneurs. So that's, it's a great example of how new tech-enabled business models can create new opportunities for women entrepreneurs. And tied to that is also having a better understanding of what are the sectors where these opportunities can be created. And that is where I think there is a wide space. As I look at the growth of different sectors in the economy, whether it's manufacturing, construction, tourism, healthcare, it isn't that clear which are the sectors that offer best opportunities for women entrepreneurs. And I don't think it's fair or it's good enough to assume that if manufacturing is going to be the fastest growing sector, then that's what is the best placed sector for women entrepreneurs. I think our understanding needs to be a bit more nuanced, which I just want to highlight as a gap that exists today. Next, talking about access to finance, Alison mentioned a really good example. And similar to that, we see a lot of innovation happening around alternate data sets that can unlock access to credit for women. And there I see there's an important role for intentionality. Just to give one specific example, we recently worked with a company that provides essentially support to entrepreneurs who have become delinquent in paying back their loans. So they work with them to figure out what the payment plan should look like and essentially get them back on track with the financial institutions. And even when we structured the project with them to specifically focus on women entrepreneurs, it wasn't easy. They did not have the capability to target women entrepreneurs. Women entrepreneurs weren't the natural recipient of the public campaign that the company was driving to attract them. And as a result, in the first iteration, 80% of their clients ended up being men, even though the campaign was targeting women. So then they had to learn and iterate, and eventually the percentage crept up to 50, 60%. So, essentially the point I'm making is even when it comes to technology, it's really important for us to, again, have the nuanced understanding of how to make it work for women entrepreneurs. And should not assume that what works in general for the market would work for all types of women entrepreneurs. With that, I just wanted to turn it back to Alison. I think she has, from her experience, has more ideas to talk about the role of digital in financial inclusion for women entrepreneurs. Over to you, Alison.
Thanks, Anjani. That was really nice of you. I couldn't agree more that there's an intentionality that is so important as we design, and that technology in and of itself is agnostic, right? That it's sort of how we apply it that is useful. I guess one very quick example in Bangladesh, something that we've been doing with the Bill and Melinda Gates Foundation is taking the learnings around digital wages, in that particular instance in the segment of workers, garment workers, and really leveraging research that's been done to understand how can we digitize wages or payroll in a way that leads to greater financial security and financial control. And the Bill and Melinda Gates pioneered this, and MasterCard has gone on to create digital tools to be able to replicate at scale in other markets, in Cambodia and Egypt. And I think that that's a really interesting way of us being able to partner together, being able to build on one another's learnings, build on academic research, and really take technology and help it and help us to do something that's impactful, that really changes women's lives for the better.
Thanks, Alison, and thanks Anjani for some excellent points there. I'm going to use this opportunity to invite Kanika Pal from Unilever to talk to us about how, Kanika, you think we could be creating livelihood opportunities and empowering more women entrepreneurs, even nano entrepreneurs, as you refer to them, to improve financial security. And I think there's one specific point that I wanted to make here. I know a lot of data points that we talk about around financial resilience and security are all linked to formal enterprises, and you especially have talked about working in a space that's very informal, that's almost sort of under the radar, so to say. So when we talk about areas like financing gap or measuring financial health and resilience, how it'll be great to hear how you, in your own experience, go about doing that, and where do you see some of the gaps and opportunities for more corporate foundations to engage in this space?
Great, thanks so much, Aparajita, and it's just so lovely to hear Alison and Anjani speak before me, because a lot of what I'm going to say essentially is going to be also a marriage of the two conversations that we've had before me, because I think what becomes very clear when you're looking at the potential of creating livelihoods itself is also terms which are very loosely thrown around, right? Financial security, financial resilience, financial freedom. What do these even mean when it comes to people really in their life? And therefore, through my next 3 or 4 minutes, I just want to decode some of these terminologies and throw in some practical examples of the work that we've been doing in Unilever as well. So like Anjani mentioned, livelihoods can happen for women, specifically can happen through 2 or 3 ways. I specifically want to focus on 2 ways. So entrepreneurs and enterprises that are led by women, which are very, very important in this entire ambit. And these entrepreneurs could be solo entrepreneurs or nano entrepreneurs. And if it is a nano enterprise, a likelihood, or a solo entrepreneur, the likelihood of this really creating a job is very skim, but it needs to be of a certain size and scale for it to therefore create jobs for more people. So for example, the Kirana store or the pop shops that Alison mentioned, the potential of that creating jobs for 2 or 3 more people is likely than compared to an artisan who may be in a village creating, say for example, pots and might be selling it locally. Now, the other way is, of course, for women to enter workforce or the gig economy. And how does that really pan out? What kind of constant skilling and reskilling is needed for women to be able to really have a very secure livelihood and a constant means of income for them to therefore get financial security? And then the overarching lens that I want to play out is of the role of digital. And in today's day and age, if we don't talk of digital, I think we are likely to miss the bus, because all of us have seen, especially in the wake of COVID, that digital finance has taken shape even in the grassroots level in a country like India, much more than what it was perhaps just 2 years ago or 3 years ago. So the program that I had at HUL, which is Hindustan Unilever Limited, is called Prabhat. Prabhat essentially is the Sustainable Community Development Initiative and has economic empowerment as a very, very key pillar of all the work that we do. And we have been working on the aspect of creating both entrepreneurs as well as enterprises that have women at the forefront. And these women come from very, very humble socioeconomic backgrounds. So I want to deep dive a little bit and take a minute to talk about Project Moo, essentially, which is our program for dairy farmers, wherein we're using technology or a digital app called Moo, which is partnered by Moo Farms, a social enterprise, wherein this farmer can register on the app, and she or he, for that matter, gets complete data on, or pop-up saying this is the time for vaccination of the cattle, this is the time when artificial insemination is possible, these are the linkages, and then we've added more and more initiatives to it. So these are the so there's a linkage that can happen with the market, so on and so forth. And this fused, so technology to my mind has to be fused with the human touch. So this fused with the human touch, wherein physically there are visits given to this farmer, and more inputs are given with respect to a whole lot of things, such as what is the upkeep of the cattle, what is the area really looking like, how much sunlight is coming, what is the water practices, storing practices, so on and so forth. Now, while we were in this journey in the last 3 years, we realized that a lot of women do not even own assets like a smartphone. This is typically owned by either the man of the house or the teenage children in the house. And this also means that if the woman is not owning a smartphone, then her willingness or comfort to be digitally trained or educated on something like this is going to be a barrier. And it gets more complicated further if literacy, basic levels of literacy are not even there. Now, these barriers are further compounded with the overall status of the woman, the social norms in that region, and the conditioning that a woman has had over a period of time or generations, which locally in the society that she is really operating in, can either provide or not provide a secure and enabling environment for her to actively then participate in her own livelihood and financial security journey. So any program that organizations or social enterprises or NGO sector carves out has to work hand in hand with some of these challenges that I talked about. Alison very rightly said, you have to be able to take the family along. Taking the family in the decision making is one of the key criteria for the empowerment of the woman, giving her comfort therefore to step out of her own comfort zone, and in this case be ready for a digital literacy training, and then slowly empower her or equip her with the right skill sets to earn more income and also take decisions around it. Now, this entire piece sounds like a very easy to lay out jigsaw puzzle, but should one piece be missing, it will never be able to find a proper solution in this entire thing. And also, one last thing before I wrap up my conversation is that improved skills and capability to generate income in the household doesn't necessarily lead to improvement in assets or control of assets, and therefore improvement in financial behavior. These can actually be two binaries as well. It's not necessary that they end up becoming complementary. And therefore, it's possible that a woman may actually earn better, overcoming a lot of the barriers that I mentioned above, but the husband of the house is still controlling the money and perhaps using it for something like substance abuse. So therefore, when we are carving out all our programs, which could be income generating for a woman, it's very important to also see, is it leading to financial security? That is, that she's able to do the day-to-day running of her household requirements smoothly because of that additional income? Or does it lead to financial resilience, which means that the household can absorb certain financial shocks, such as maybe there's joblessness that happens somewhere, or there's a healthcare need that happens somewhere? Or does it lead to better financial control, which means that there is a greater sense of social protection that the family feels? And finally, then the pathway to financial freedom, where future goals of the family is also secure, such as child marriage or education or crop insurance, and so on and so forth. And this journey for a woman from financial security to resilience to control to freedom is not something that happens overnight. It probably needs decades of work, for us to empower women in that sense. At this point of time, in HUL, with the programs that we are running, we are helping women to get financially secure. There is a long way ahead for us to enable that pathway to financial freedom, but we do hope that somewhere we create some delta movement in that through all our endeavors. I'd stop there.
Thank you, Kanika, and very, very nicely put. I think this is an intergenerational challenge that we are dealing with. It's not going to get solved just by creating more opportunities. I think there's clearly more work needed in terms of building the right products for even basic things like savings and investments that women actually have an agency and control over, and that households see the benefit in supporting them in as well as society overall. What I know we're heading towards the end of this panel, and we probably don't have a whole lot of time for questions, but I did want to take up one question that came in from Chris Wolf. And Anjani, this is specifically directed to you. Chris mentions that you talked about alternative data sets to benefit women, but sometimes women can be excluded from some digital footprints, as Alison had mentioned. So what types of alternative data tend to be more inclusive for women, particularly MSME entrepreneurs?
Yeah, thanks, Aparajita. I don't have a really good answer to that, but just some observations, I guess, that I have that I can share. One, yeah, it's absolutely true. Statistical discrimination, it's a fact. We see that in portfolios of most financial institutions. But I think there are certain unconscious biases that research is able to point us towards, that if financial institutions are able to incorporate in their decision making, as well as in the data sets that they use, it can mitigate some of that discrimination that happens. But we do have a long way to go. So, for example, one of them is that typically the women entrepreneurs who are seeking, who are new to credit, face a much bigger hurdle to access credit than women entrepreneurs who have experience of running a business for 2 or 3 years. Essentially, the finance gap starts to decline as the experience of women entrepreneurs increases. So, so one of the points or data points that helps reduce this bias is to actively track portfolio of women applicants who are new to credit. And compare that to the disbursement that is happening against the overall portfolio of a financial institution, to make sure that that bias is not playing into the decision making for first-time borrowers. And second is to also try create books which are more heavily weighted towards women entrepreneurs. And that's where facilities like blended finance come into play, because you can use that risk mitigation to get your data sets more accurate, because it does require some iterations and learnings to perfect that data set on which you're making decisions. So combining that experimentation with some risk mitigation mechanism also helps improve the quality of decision making. Thanks.
Thanks, Anjani. Kanika, Alison, would any of you want to add to any perspectives to this response?
So I would just build on something that Anjani had mentioned, is this idea of risk mitigation, and that there's a role as a bridge to help financial institutions really build their understanding of women borrowers, particularly those with very little experience or very little credit history. And I think that that's a really valuable point, and something that we should all be thinking about, sort of what's our role in helping to do that. And then clearly, as Anjani already said, recognizing where the statistical bias is, and again, being creative about how do we try to problem solve those. I think at the end of the day, though, no one stakeholder can do that alone, right? The government sort of regulating that is not going to force, particularly private banks, to change their behavior. Donors can come in with some money, but unless it's thought of and engaged with the private sector, it's a small program or project. And so really, it's how do we bring together the different perspectives and try to work in concert to move the needle in a way that's both sustainable and scalable, and really is transformation of business as usual, because that's the secret sauce that we're all after.
Great, thanks, Alison. Kanika, any parting thoughts from you?
No, nothing, Aprajita. I think Anjani has already mentioned it, but I just want to press on the fact that sometimes we do undermine things like the power of, the first guarantee for default guarantee for the loans. The power of that is so huge that it can unlock a lot of capital by just this investment. And the fact that it becomes on a rolling basis also is able to minimize your investment, but have a much greater return on investment in that sense as well. And I think this is to be viewed purely as community investment in its true format, because this is yielding not just financial capital but social capital and so much more, and all the challenges that we spoke at the intergenerational level. It's a mindset shift that we're really looking at, and therefore access to finance and guarantees for those first loans, I think, are a very, very powerful instrument, and perhaps is somewhat underutilized at this point of time, but has great potential in days to come.
Yeah, thanks, Kanika, and thank you, Alison and Anjani, for some really interesting points and very insightful observations from your end. I would encourage you to look at the questions that are in the Q&A tab. If you could add your responses to it, I think that'll be great, and great for our audience as well. With that, I'm going to ask our next set of panelists to join us, and thank you again. You can keep your camera off or on, whichever way you like. Our organizers will bring up the next set of panelists on screen. To get to the introductions for our second panel today, we have with us Ragini Bajaj, who is the Director of Strategic Initiatives at Caspian in India. Ragini and I go back a long way, so we can talk, I guess, for days around financial resilience and women's empowerment. But Ragini, great to have you here. Our second panelist today is Hilda Mora she's the CEO of Pezesha in Ghana, and she's going to bring in some perspectives from crowdfunding platforms and platforms that enable financial inclusion. And then our last but not the least, our third panelist is Agung, who is from Agung Hadinegoro, and I'm not sure I'm pronouncing that right, but he's from Indonesia, and he's the CEO and co-founder of Warung Pintar. And we are going to listen from him about digital supply chains and go-to-market solutions. But in a bit, I think he's going to join sometime during this panel. But to get us all started, and I think just picking up from where Kanika left off, I think she started talking about the whole importance of loan guarantees and how you look at in terms of building enterprises. I think, Ragini, I wanted to direct the first part of conversation to you to talk about, Caspian, some of us know works in this space, and you have been helping build enterprises in India. So would love to hear from you on what it takes to really build resilience for women enterprises. And I think it'll be great to hear how you enable, or what your experience has been in building women's enterprises, not just through financial services, but also going a little bit beyond in terms of what you do to ensure that financial security and resilience and some of the I would say some of the things that go hand in hand in ensuring that women have better agency and control over their finances and their financial well-being. How do you also tackle those through partnerships and through your initiatives? Ragini, over to you.
Yeah. So thanks a lot, Aprajita. And as you said, I represent Caspian Debt, and we are an impact investor, and we go a long way. We've done various instruments. Basically, with Caspian Debt, we do customized collateral-free debt for companies which we call our building for a better world. So the way when we evaluate businesses, financial health is the foremost thing that we look at. And the way I think I would like to congratulate UNCDF in terms of how they're looking at financial health in a more holistic way. And that's how we look at it when we look at companies. So it is about looking at whether they have financial security, whether they can meet their short-term liquidity requirements. So it's all about looking at their current ratios, quick ratios, their working capital cycles, and things like that. Then we look at whether they have resilience in terms of meeting their unexpected challenges that come across. And I think COVID has stress tested everybody. And we worked with around 157 companies. So, we've looked at all of them and how they have built it around. So here, what comes to play is capital adequacy, the leverage. How are your assets funded? what is the seasonality of your revenues, what kind of relationships you have with your suppliers and your customers, you know. Then the third aspect of control is more futuristic, you know, whether your businesses are falling into a important bucket or a discretionary bucket, whether your investors are there to support you, what kind of relationships you have with them. And the last but not the least is more long term, what kind of sources of finance have you diversified them, equity versus grant versus debt. And also about the stickiness of the business model. And I think Hilda would be able to relate to what I'm saying, you know, in terms of how you look at. So from our side, the way we look at it is we monitor them monthly, we monitor them quarterly, we look at their business plan projections, we advise them, we put them into stress test. And our advice through all these issues, especially in the current COVID scenario, has been to conserve cash, differentiate between urgent, important, long-term, short-term, communicate with all the investors that you have, communicate with your partnership. And this is a stress test of everything, your relationship, your business model. And when you look at a crisis, don't you look at it in terms of how your business model is changed. And it may mean a completely new normal, you know, it may mean doing things completely differently. Like, and what Alison and others were talking about, the technology. Most of the Kirana stores today do home delivery. They are digital, they're available on WhatsApp. That wasn't the case. So they're not doing the business the way they were doing earlier, right? And also our advice to everybody is, do not let a crisis go waste. Learn, adapt, and and be honest about things which are not working. If it's not working, it's not working, you know. Yeah. So I'll stop here and happy to take any questions later.
Sure. Thanks, Ragini. We'll hold off on questions for a bit, but I think there are some questions coming in the Q&A panel, so feel free to add your responses and perspectives to it in the meanwhile. But I think I'm going to invite Hilda now to talk a little bit more about her perspectives on how crowdfunding platforms can increase access to capital and accelerate the process of building better financial control. And I think Hilda, since you're representing for us not just your company but also West Africa region, I think we'd love to hear a bit more about how you see this in contrast with financial resilience and security in that region of the world specifically. Hilda, over to you. And
thank you very much. I think this is an exciting time, you know, where we discuss about, you know, post-COVID, post a crisis, how do we recover? This discussion is already leading us to that conversation. You know, talking about financial safety, financial resilience, financial control, financial freedom. You know, that is what we believe in Pesesha as the route to recovery, as far as really bringing back the SMEs, not only just to be financially included, but also to be financially healthy and build wealth and prosperity in the end. We've taken a different approach. We've built a digital lending infrastructure for Africa that allows us to basically leverage innovative approaches in the way we include SMEs who have been underserved and excluded from the formal financial system. And so we've taken crowdfunding as the alternative approaches that we believe it's scalable and can be able to be applicable in many African markets where the opportunity of credit needed more than ever before, especially now during the crisis. And so our goal is really to reduce inequalities, especially where women have been excluded, and of course, deepen the local capital market. So the way we look at crowdfunding as one of the approaches we take in Pesesha in really driving financial inclusion is as the route to a shared economy, you know, where we can basically take a collaborative approach, which is the way we run, you know, financial inclusion to these SMEs. And then we access capital through investors, individuals who are part of the local market and willing to be part of that community and provide a purposeful way to earn returns. And not only just looking at the returns, but they are also incentivized by the aspects of building prosperity and financial in the end. And so we've done this in Kenya. just as a case in point, for the last 4 years, we've been building these alternative financing approaches to reach, MSMEs that have been excluded from the formal financial system. And we've seen these approaches work in Kenya. Crowdfunding, embedded, and because our infrastructure has a lot of value add, which I will talk about later on how we're actually approaching, that value chain. These approaches, crowdfunding has been at the top of, an initiative that we want to scale, because we also got approval here in Kenya from the Capital Markets Authority, who rubber stamped and said, our infrastructure was robust to scale even within Kenya. And so the next question for us as a company, how we take the same approach, to other markets in Africa, where we believe that the financial gap for small businesses will be solved by approach. And Ghana was on top of the list, just also because there's quite a lot of, exciting stuff that are happening there, even from the point of regulation, supporting SMEs. And we're very glad, we got to collaborate with UNCDF in our entry to Ghana to take the learnings out of self-help platform to extend them to Ghana. And we've been there for now almost a year. Actually, this July, in Ghana, and we're very excited that we are celebrating as part of this discussion to really, look back in retrospect and the work we've done to, provide financial inclusion to SMEs in the Western region and Ashanti. We're talking about $5 billion financing gap in Ghana. And of course, if you combine, we are headquartered, it's a $19 billion. So there's quite a lot of opportunity to solve this financing gap, and of course, in the markets that we need, has really tested our resilience. And I think SMEs have been, at the top of that test. And so at Pesesha, we're just, leveraging crowdfunding infrastructure to do three things, basically to allow SMEs to survive. This is where we bring working capital, both in Kenya and Ghana. And so like embedded financing, which was actually described in the previous panel, where we integrate with suppliers, we integrate with partners, and partners that the likes of the UNCDF has connected us with locally in those markets to see how can we collaborate to bring productive credit that is going to not only just be used for business purposes, but we can actually see it translate to growth for those businesses that we fund. The second thing is, how do we help these businesses to basically reset, which is the next aspect of where our focus is in terms of bringing financial inclusion to the next level, really empowering them to be able to attain their financial control. So we've introduced financial education chatbots. So like, for example, in Ghana, we've rolled out our financial education chatbot that so far more than 50% of the people who've gone through it are women MSMEs. And so those women have been able to be educated on how they can basically understand credit, because there's a lot of perception and cultural issues that we have faced as a challenge to include more women. And so we've seen the aspect of introducing that financial education really help to accelerate their knowledge to understand credit, and more continued to be part of the Pesesha movement and infrastructure to really help their businesses to grow. And so some of the things we educate them is cash flows, how do they maintain their cash flows during these difficult times? How do they make sure that they don't get over indebted, and take credit from all the lenders in the market, because, there is all these options, so we teach them those kind of things. How do we make sure that they think about building a positive credit score? They build they continue to build a positive credit score. If they use our tools, their score increases and they get higher loans. So we're building a Pesesha, financial ladder where we allow these businesses to grow pragmatically, but at the intention to grow their business to the next level. So it's about, also the last part of what our work involves in Ghana and also in Kenya is helping these businesses to thrive. How do they build the resilience post-COVID? And we have done a lot of work in Ghana, of course, in collaboration with our partners on the ground, including UNCDF and other payment providers, to say, how can we reach more low-income communities? And we faced a few challenges, to be honest. We have had a smooth ride, penetrating and scaling this crowdfunding model in other markets. I think one of the biggest challenges we faced in Ghana, for example, is regulation. How do we harmonize regulation? For example, in Kenya, we've gone through the approval process. We take the same learnings in Ghana.
Yeah, sorry, it looks like we've lost Hilda. We'll just see if she comes back. Meanwhile, I'd love to introduce Agung Besar. Agung is the CEO and co-founder of Warung Pintar in Indonesia, and he was delayed to join us due to another conflict. But Agung, so glad you're here. And while we wait for Hilda to join, maybe I could invite you to give your introduction and also talk about. Okay. Wait, I see Hilda here, so maybe we'll ask Hilda to complete her thought, and then I'm going to invite you to talk about your points.
Got it. Thank you.
Hilda, I know we lost you at some point a minute ago, so would love to hear.
No, sorry for that connectivity issues here, but I think I will just conclude the conversation just for the interest of time to say there's a lot of opportunities with crowdfunding to accelerate financial inclusion, at the same time, financial health for SMEs. The beauty about the crowdfunding approaches is the shared economy, bringing individual participants, the diaspora community to participate, and also create more income flows to their own pockets. At the same time, we've been able to give them diversity of products. They can choose the SMEs they fund. On the other side, we have been able to credit score quality SMEs that have been able to grow to the next level. As I said, 50% finance, for example, in Ghana women. So it's exciting times, but I think just to conclude, the regulation challenges, cultural issues, making sure that these SMEs are financially educated to understand the benefits of credit beyond just, using it in their business, but something they can grow and prosper is definitely challenges. We think it's going to be a collaboration effort, and it's going to take government, it's going to take academia, it's going to take institutions that are aligned to really drive financial inclusion, meaningful financial inclusion and financial health in the end. Thank you.
Thank you, Hilda. All very great points, and I did have a couple of questions around this, but I'll reserve it till we have Agung share his perspectives. Agung, I'd love to hear from you about what it takes to digitize supply chains and go-to-market solutions that you see could potentially improve income for women-led SMEs and help build financial resilience.
Definitely, Aparajita. Thank you again for inviting me. So just a quick check on can I share my screen? Is that something
Yes.
that I see? Yes. So I'm probably my background is in technology, so probably public speaking is not really my forte. So I need slides to actually talk about this. Really sorry, guys. So if you could see my screen here, so we built Warung Pintar about 3.5 years ago. My name is Agung. I'm a CEO and co-founder of Warung Pintar, the company that we built 3.5 years ago. And why we built this is because we see supply chain in Indo is a big, it's especially traditional supply chain, right? It's a really big thing in Indo. So even though we have mini market, supermarket, and hypermarket for years, for decades today, 70% of the consumer goods is still flowing out into this traditional supply chain. And while the supply chain is big, the supply chain is also very fragmented, and a lot of it is inefficient. And who's actually has taken the toll on this very heavy, very busy supply chain is actually the mom and pop shop, right? The shops that is on the end, at the end of the supply chain, which is the retailers, the traditional retailers. And we really see this as a huge problem that we really wanted to solve. And we built Warung Pintar, right? So Warung Pintar by solutions is we are actually an end-to-end solutions for the supply chain itself. So for the warungs or for the retailers, we have an app that is connected to the whole marketplace. While on the other end, we also digitize the distributor, we digitize the wholesalers, and we digitize the, we also have our own trading business. While we also try to connect brands and manufacturers into this ecosystem, right? So with this, now warungs have access to all the items that they could access, right? Because previously, if you're a mom and pop shop, you only buy it from, place that right? So you only buy it from, the wet market, you wait for the salesman to come in. Now, I think warung could see and actually buy and choose whether they wanted to buy it straight from the distributor all the way the upstream, or they wanted to buy from their local wholesalers. And I think that really changed the game because then warung have the choice that actually really improve their efficiency, but also improve the knowledge, right? Other than that, we also start building up more and more features on top of that, such as lending. So we do have our own financial service working with both banks and also fintech in the country. And we start doing a pay later model. So it's kind of different than normal lending where we don't disburse any cash. What we do is we digitalize the payment and we extend the payment methods. So the warungs or the retailers now have more cash flow capabilities. And other than that, we also enable digital tools such as POS and digital ledger. We also enable an additional revenue channel by bringing in brand and manufacturers having completely direct communications with the warungs. So for example, brands could start their own official store. They could pay for advertisement. They could also pay warung to actually do advertisement for them. So there's no more middleman in this area, right? So we improve the efficiency of the whole ecosystem of the logistic. And with that is actually, by the end of the day, Warung Pintar is, we never say that we are a social enterprise, but social impact is always in our DNA, right? So we always measure our social impact. And now we have 500,000 warungs or mom and pop shop in our ecosystem, which then give a lot of benefits to them. The first benefits is actually the business side, right? So operational wise is much cheaper and they could save a lot of time. And with the availability of the items that they could actually access today, now they can actually have a better pricing on buying. Then they could also play around with a financial product on top of that, right? So this enable more business for them. But more business means what? More business means more financial security and also financial health in that sense, right? Especially when at the start of this pandemic up until now, majority of the people are losing job, right? And a lot of this warung has become the backbone of the family. And more than half of the warung is actually owned and operated by a female or a women entrepreneur. And this is really amazing time, right? Because then the wife has become the main source of income, and actually a lot of the husbands start helping out in the warungs, and this open up a lot of opportunity for the warungs or the family business to grow and enable financial availability for the family. And that actually improved the happiness of the family, right? Because then with more time, with less cost, with more profit, then the family could provide to themselves, and that is actually provide happiness to our team as well. So that is why we built Warung Pintar. So today we are we're not, so our country is super huge. We don't even cover the whole country. So we cover about 200 cities and agencies across Indo. That is about half of the areas. So if you can see here, majority of our presence is actually on our main island, but Indo is it's a huge, we have hundreds of, we have thousands of islands, and everything is just fragmented. So we currently have about 50 warehouse, more than 450 wholesalers, and we have largest monthly transacting users. We have more than 120,000 warungs or mom and pop shop that is actually transacting and engaging in our app. And I think that's about Warung Pintar and how we improve the supply chain in our lovely country. And give back to you, Prajita.
Thank you, Agung. This was quite engaging and very interesting to see how you track the happiness index as well. So really exciting stuff there. One quick question I had for all of you, in fact, was just that the three of you are are part of organizations that are also continuously designing innovations and products, and thinking about how can you reach and address needs of women entrepreneurs more effectively. So I'm curious to know what, maybe that one thing that you do to ensure that you're getting the design right. What do you do? And maybe each of you can take a stab at this, because one of the things that we often hear when we work with intermediary organizations is how they think the product is going to work for the women, but not necessarily, the design may not have necessarily incorporated what the women might actually be seeking, whether it's a financial product or a service that you're rolling out. So just curious to hear how you address that, each of you, and maybe we can, Agung, maybe we can start with you right now, go the other way around, you, Hilda, and then Ragini.
For sure. Happy to share this. So I think I'm very happy you asked these questions, Rajita. So because I'm a tech guy, right? I'm a product person. So this I could go hours and hours talking about products. So design is actually very important because actually when we are talking about design, especially in this case, when we talk to our team member, our software engineer, our product designer, our product managers, we always tell them that, we're not building this product for ourselves. And this is where we have to, negate the assumptions inside our head and actually talk to and empathize to the users, right? So I think it's really tough love for us to actually build up this product, because we have to actually go down and actually talk to the warungs and talk to them what do they really need. Actually, our CPO, when we first started, our both CPO and CTO, my co-founder, when we first started, they man a warungs for 2 weeks, actually, like whole time, 24-hour, and that is for them to build up, our foundational product, and they still do that from time to time. We still send out people, and unfortunately during this time it's tough, right? So we try to do a lot, try to be creative and try to actually go down, do a lot of phone call discussion, try to do a limited discussion. But I think what really important is that along the way we also create a community, and community is actually a way for us to actually understand the needs and actually a place to exercise design thinking, exercise product development there. So currently we have probably about 50,000 50,000 people joining our Facebook group. So the Facebook group is actually, funny story, it started just as a research group, but end up become the largest Facebook group for Indonesian warung owner or mom and pop shop owner.
Wow, very interesting. Agung, I should point you to a bunch of questions that have popped up for you in the Q&A panel as well. So if you could answer them, probably type your answer and respond. But Hilda, maybe we'll move to you to hear about how do you make sure that your design is responsive to what the women really need?
No, thank you. I will try and summarize that, because there's quite a lot of work that goes into understanding, the design for women, because of course, everyone wants to include them, but it's also very complex in its own self. So one of the ways we've done it, at least for Kenya and Ghana, we've been able to leverage on our financial education. So we do a lot of personalized financial education, because we have a lot of data that we collect as part of that process. So we are able to look at where are the gaps, what are women versus men having difficulties with. So you'll find in certain cases is how to manage debt, how to do savings, how to basically, what do you call it, how to budget. So we start to introduce, personalized and tailored financial education modules for women. So you'll find in most cases, certain women go through certain financial education modules, which other male counterparts who are SMEs don't go through it, because women have come out and said, I'm facing a difficulty in sharing, certain things with my husband. When I borrow credit, it's meant to be for both of us. I want it to be for me because I also run a business. So we start to educate them on certain modules that are so personalized to them. So we do this not just by the chatbots that I mentioned, and I think this is a question that has been asked in the chat. We combine it, we have a hybrid approach. So we don't just do chatbots. Chatbots is definitely one of the channels that has really been very powerful to collect much more data to understand the segments we work with, but it's not an end in itself. So we've worked with groups in I think in Africa, all the social groups have a name. In Kenya, we call them chamas. I forget the name in Ghana, but I think in Nigeria, they call it esusu. So each African country has built, that social network. So what we do is we leverage on those social networks to perform our financial education, to reach out to more women, but also to reach out to these groups, to help us to understand how to work with women. So in Ghana, it has worked really well. We've rolled out, a lot of group lending through SMEs as one of the strategies that has worked for our acquisition. And so we're seeing that, especially in the rural areas where we are penetrating, Western region and Ashanti. Group lending is working really well. So we go to these women, they organize groups, social groups, and then we educate them, but we also train them to educate other women in the group. So like trainers of trainee, that they can actually be able to educate the other women in the group who might not be able to understand, how to approach credit. I think lastly, what I would mention is, reaching out and designing products for women, requires, a lot of, flexibilities and, just being able to understand, what are the other women interested to do. So there's a lot of perceptions. And so one of the things we've done in Pesesha is we've built a lot of success stories of women we funded, so that women also know it's possible to be part of that dream, to be part of that journey. So we've put so many success stories of women we funded in the rural areas, and it has come out to be an inspiration to other women to know, if this woman was able to be funded by Pesesha, we can also be part of that journey and prosperity. So those are some of the strategies we've used. Thank you.
Thanks, Hilda. Fantastic, fantastic responses. Ragni, over to you.
Yeah, very quickly. So for us, the product development is all about customizing it to a business model. So whether the seasonality of revenues, the cash flows that they are getting, the expenses and all that. So all are right from starting from the loan size to how the repayment comes or the moratoriums, they're all guided by the business model. So for us, that is supreme, in terms of how we work around it. So I wouldn't say that we tailor it for women, but we tailor it for each business model. So any loan that we have will not be similar to the one that other has, it would be very much. So education companies will have most of the repayments coming in, let's say, April, May, June, and, agriculture companies would have it according to the seasonality. So that is where. And we, for us, there are two parts. One is when we do a due diligence of that business, when we try and get into the threadbare of it, is when the product emerges through discussion. That is one. Then when we onboard them is when we take them through all the requirements that we'll have, whether it is legal, what the reporting requirements and all that. And these are like continuous feedback loops. And we have annual customer surveys to help us, understand what our customers are facing. And for us, the best report card is how their repayment performance happens, month to month, quarter to quarter. And for us, we know that, we have customized it right so that there is no stress on them for repayment. Yeah.
Thank you, Ragini. No, I think this is great. There are lots of questions we see popping up on the Q&A panel. I know we are heading to the end of the webinar in the next couple of minutes. So I'm going to use this 2 minutes to quickly thank all our panelists, Ragini, Agong, Hilda, but also Alison, Kanika, and Anjani in panel 1. Thank you so much for sharing your perspectives. I think there's a wealth of knowledge and insights here that all of you bring, and we've clearly not had enough time to go into everything in detail, but I think there are definitely some really interesting ideas and solutions and already collaborations and partnerships in the making that I can see just coming from the chat, from all the chat that is going in the chat boxes. There's clearly, ways in which a lot of us can work together and ensure that we are continuously encouraging women's entrepreneurship, helping build more financial resilience and security. I'd also like to, on behalf of UNCDF and Center for Financial Health, also thank them for putting together this extremely timely webinar, especially in a post-pandemic world where women's entrepreneurship, women's financial resilience is probably at a much greater risk than what we've ever seen, and data already suggests that it's been set back by several years. So everything and anything that we can all do to ensure that the products and services and initiatives that we are building are more responsive to women and to especially to women entrepreneurs are definitely going to go a long way in building back the economy at every level. There are quite a few resources that the Center for Financial Health also puts out. So I'm going to share this in the chat box here for everybody. And please feel free to browse through those. Let me see if I can put this, or I'm going to ask Raki to actually do that, because I'm not sure if I can actually put this myself. But once again, thank you everybody for being here and for being a part of this webinar. Please keep the conversations going. UNCDF has a very active, UNCDF Digital has a very active Twitter handle, and they hope to take some of these questions that have gone unresponded over there as well. But also that's a place to find each other and some interesting collaborations too. So thank you again, and we hope that you have a great day ahead and a great rest of the week. Thank you, Raki, and thank you, UNCDF, for the opportunity.